Today we're talking about buy downs. And from a realtor's perspective, I haven't seen buyers use a lot of buy downs probably since the mid 2000s. And that led me to think that maybe first-time home buyers aren't familiar with the program. And perhaps some of the newer agents that have just gotten into the market in the last 2 years aren't familiar. So I thought a video on buy downs in today's current market conditions would be a great way to introduce the program and see what the benefits would be. Today, I've got Dirk Hellige with me. He's with Bank of Iowa, and he has graciously offered to share his expertise on buy downs. Welcome, Dirk.
Hi, how are we doing today?
Excellent, thank you. Thank you for joining me and informing me a lot more about buy downs because I need to learn as well as everybody else. So
All right, well, let's do it.
I guess the best place to start would be, what is a buy down?
So a buy down is basically, the easiest way to tell it is it's a discount off of the interest rate for a certain period of time. So basically the buyer of a home can get a discount, can lower the payments for a short amount of time, and hopefully during that time or shortly after that time, they can refinance at a better rate and just keep the payments down.
Okay, so that would be great for buyers that are looking for the opportunity to reduce their lower monthly payments for a certain amount of time with the expectation that our interest rates are going to probably go back down, and then they can refinance at the lower rate then, right?
That's correct. Yep.
So are there any special qualifications that a buyer needs to have to receive this program?
Not particularly, no. It can go based off any normal conventional or FHA or VA loan. The buy down's available. Typically you see it most on fixed rate loans. You don't really see it too much on ARMs, but fixed rate loans, it's extremely common to get that approved.
Okay. Is there a certain price range, or is it a purchase price of anywhere from 100,000 to $1 million?
No price range. I know several jumbo loan lenders that will do it, in-house loans. I have not seen a price range, no.
Okay. Excellent.
There's no down payment range either, so it really does not matter what someone does, as long as they can do the down payment that's required. They can do the 2-1 buy down.
So the down payment that's required for them to qualify for the loan.
Correct. Yep. Excellent.
Great. Okay. So I see how this could benefit the buyer. In certain market conditions, one of which we're in right now, where the seller's inventory is increasing, their competition's increasing year over year. Like last year to this year, we've got about 25% more homes on the market that are staying on the home a little bit longer, which, yes, then creates a competitive market for the seller. So I could see if a seller, instead of using price reductions all the time to try to attract that buyer, that maybe offering a buy down would be a good idea.
Yes, you're right. Yes.
Okay. What would be an example of how sellers could do that?
So basically a seller would basically just put on the purchase agreement, or they could market their listing, with the listing agent. They can market that they're offering a 2-1 buy down to any buyer that comes in and signs a purchase agreement with them. And it's a lot more beneficial if you have someone just down the road that does a price reduction of $10,000. Let's say same house, the one down the street's $10,000 less, but you offered a 2-1 buy down. The $10,000 less might change the mortgage payment, between $50, $60 a month, as the buy down would change your mortgage payment over the next couple of years, could be up to hundreds of dollars a month. So
Right.
The buy down's a lot more effective marketing tool to get a home sold. It's just a lot more enticing than dropping the payment. Depending on how big the payment drop. Not payment, sorry, but dropping the purchase price.
Okay.
You know, you can drop the purchase price a lot, and that might make a big difference. But we're not seeing sellers just
Yeah.
drop the purchase price. Because you'd have to drop the purchase price to $100,000 to get hundreds of dollars of savings a month on most loans, and no one's going to do that. So a lot of people would rather just
Exactly.
not drop the price and just offer the buy down.
Okay. Is there a limit to how much the seller can offer a buyer?
There are several different types of buy downs. There's the 3-2-1, which is a 3-year term, but the most popular one that everyone's doing right now and most affordable is a 2-1 buy down. So that's a 2-year program. It costs around 2.5% of the loan size. So the seller would have to pay 2.5% of the loan size. And I'd say the seller would have to pay because it does not make sense for the buyer to do it at all if the buyer has to pay for it. Only makes sense to do if the seller pays for it. And the cost is about 2.5% of the loan size, not purchase price, loan size.
Got it. Got it.
So the sellers might be celebrating if they have someone come in, put 25% down and do the 2-1 buy down, because that's going to help the sellers not pay as much because it's a large down payment, which makes it a lower loan size. So, I mean, could be a big win.
Right, right. So when do sellers pay this amount? Is it on closing day on the closing statement? And where does that money go?
Yes, so it will show up on the closing statement and it gets paid at closing. It gets put into an escrow account of sorts. And through that escrow account, it gets paid down through those 2 years. I guess we really haven't talked about the 2-year buy down and how it works.
Okay.
So like I said, the most common one is a 2-1 buy down. So the reason there's a 2 there is because the first year of the loan, it's discounted 2%. So let's say normal interest rates are, just for easy numbers, let's say rates are 6%. Well, that first year, the buyer gets a 2% reduction in that interest rate. So the first year, the buyer has a 4% interest rate for that first year. And then the second year, you only get a 1% discount. That's where the 2-1 comes from. So on year 2, instead of having a 4%, it will go up to 5%. And then on year 3, you go back to the normal interest rate of 6%. So again, you're discounted 2% on year 1, and you're only discounted 1% on year 2. And then you go back to the normal interest rate on year 3. And hopefully by then, you can refinance to a better rate, get your payments down.
Okay. So let's just say, for example, a buyer gets a buy down, and a 2-1 buy down. And then at the beginning of year 2, they have a sudden job change and they've got to sell their house because they're moving out of town. What happens to the money that wasn't used?
So any money left over that wasn't used in the buy down gets applied to the principal balance of the loan. So when the seller sells that house, the escrow account will pay down their loan for whatever amounts left over. And then basically their proceeds check will be bigger.
Wow. So, yeah. I mean, that's really incredible.
Refinance too. When you refinance, right, it pays down the loan size. So the payoff of the loan is less. So you end up having just a smaller loan size on the refinance as well.
I love that. That's excellent. So buyers don't really have any downside, really, that I can see for a buy down.
No, not at all.
Okay. You know, as we're filming this, November 2022, builders are offering a lot of incentives right now just to be able to sell a lot of their homes before the end of the year. Not only are they offering buy downs, but they're offering discount points. And so I kind of wanted to clarify what's the difference between, a buy down and discount points.
Okay. Well, the buy down, like we talked about, it's a short term, right? We talked about the 2-1 because that's the rate just everyone's doing right now. So that's a 2-year, discount on rate. When you pay points or discount points, that's a longer term commitment. So I usually give it this example. 1 point equals 1% cost of the loan balance. So if the seller is going to give going to say, okay, I will give you 1% of your loan size to go towards paying for discount points. So what I normally see is if you pay 1 point, you can discount your interest rate about 1/8 to 1/4%. So let's say rates today are at 6%, and you pay a point to get a better rate. That means your rate's going to be somewhere 5.75 to 5.875. So it's not going to be a major reduction. If you pay 2 points, you might be able to get like a 3/8% reduction, maybe 0.5%, maybe. But it's not going to be as great of a reduction in payment as a 2-1 buy down, but it's going to be a longer lasting one. So, that can last the whole term of the loan when you do that. But like I said, it's not going to be a huge reduction in your interest and mortgage payments.
Okay. Yeah. So what I understand is that the receiving a buy down loan program is a temporary reduction of your monthly payment, and discount points would be a permanent reduction. But if you do the math, you're not going to save that much money, per month.
Right, and you don't get any of that back. So if someone refinances or sells within a year or two, all that cost that was used to pay down that rate, you don't get that back in any way, shape, or form. So, it's not very, paying points is not very effective to those who either refinance very quickly or sell the house quickly. Paying points then just pretty much goes nowhere, didn't help out much. As where the 2-1 buy down, definitely helps.
Okay. Well, and Dirk, don't be frightened, but I did some math, and I know it's scary, isn't it? but I wanted to show that exactly kind of what the savings are. And so, for example, I used, and here's my disclaimer. Buyers always check with your lender and your city and state. But if the purchase price of the home is $300,000 with a 5% down payment and an interest rate of, let's say, 7% for 30 years, the monthly principal and interest is going to be $1,896. If a seller reduces their home price to $290,000, given the same interest rate and term, a buyer's monthly payment would be $1,832. So that's only a difference of $64 a month, which goes with what you're saying, Dirk. But with a buy down, given the same $300,000 purchase price, the first year monthly payment would be $1,529, saving the buyer about $366 a month. You multiply that times 12. And you get $4,394 for the first year. And then for the second year, I've calculated about $2,250. So that's a chunk of money to save. And if for some reason you have to, sell early, you still get that money, reducing off the principal, whether you refinance or you have to sell, right, Dirk?
Right. Yeah. It's big.
Wow.
So yeah, it's just that a lot of people like to chase that. And it was rightfully so when the interest rates were lower. It made a lot of sense to ask for, in the market we were in, it made a lot more sense to try to get the purchase price down because rates are already super low. That made a lot of sense. But now price reduction is not as big of a value potentially as the buy down would be.
Okay. So
long term, right?
Right. So in conclusion, it seems to me that, buy down is a good option for both buyers and sellers in today's market. And
yes,
for buyers, I see, you get your monthly payment reduced, and that, and with the opportunity to refinance when the rates go lower. And this could be a benefit for buyers that maybe they're medical students and they know their income's going to increase the next year. Maybe they're going to get married. And so they know that in the next 2 years, there's going to be an extra income coming in to the household. You know, for sellers, well, especially builders, Buydown's a great opportunity to have an incentive for a buyer to buy without reducing their prices, because that means they'll have to reduce the price on their next home they sell, which they never like to do. And for sellers that are of existing homes, it's a great way to make your house stand out to a buyer right now in today's market. So Buydown's, I think, is a great program. And have you seen that you're doing a few more of those these days, Dirk?
Yeah, I'm definitely getting a lot more questions about it. I wouldn't say I'm getting a lot of them just because the market's really slow right now compared to where it was, but I'm getting a lot more questions. I'm seeing it a lot more being offered on listings. Not a lot of listings, but a lot more. And the ones that are offering it have a distinct advantage to get their home sold.
Right. Okay, well, Dirk, I really appreciate your time today and your expertise. And if you have any questions for Dirk, his information is going to be below in the description. And this was just an overview of the Buydown program. And if you have further questions or information, you can feel free to contact me or the lender or realtor of your choice.